In 2018, Australia, Japan and the United States announced that they would jointly invest in infrastructure projects in the Indo-Pacific. This was an attempt to counter what their government said were China's efforts to court influence in the region. The venture utilises the resources of Australia's Department of Foreign Affairs and Trade, the Japan Bank for International Cooperation, and the US International Development Finance Corporation. For their first project, the three countries cooperated with the government of Palau to construct an undersea fibre optic cable valued at $30 million, which will ensure reliable, secure digital connectivity to the small island nation.
I am delighted that Australia, Japan and the United States, along with the government of Palau, are working together to finance and construct a new Palau submarine cable as the first project under the Trilateral Partnership for Infrastructure Investment in the Indo-Pacific.
We want to help the people of Palau develop their economy, strengthen links to their neighbors and the United States, and emerge from the COVID-19 pandemic more resilient and more connected. This is what free nations do. They support one another openly, transparently, and for mutual benefit.
Palau needs safe, resident, and reliable communication network. As Minister for Foreign Affairs of Japan, I declare that Japan is determined to continue offering quality infrastructure for the Indo-Pacific region. Thank you.
Despite this enthusiastic start, the Trilateral Infrastructure Investment Program has yet to make any considerable progress in the past few years. This slow progress is due to various reasons, notably the lack of government funding, low level of private investment, high scoping costs, geographical obstacles, and negotiating problems with host communities. How can the three countries overcome these challenges and better coordinate on regional infrastructure to address development needs in the Indo-Pacific?
You often see a widely cited ADB report that claims that an annual investment of about 1.7 trillion US dollars is required to maintain growth momentum in Asia, to tackle poverty, and to meet the sustainable development goals, which includes things like the cost of climate mitigation and adaptation. And so, according to that estimate, the infrastructure financing gap is about 459 billion US dollars per year. And, so therefore, it's really essential that countries like the US, Japan, and Australia be paying attention to this. And as much as China is in the news for its BRI initiatives, it is, not spending nearly enough to meet the needs. And I would also like to say that it's clear that all of the three countries that we're discussing today have clear strengths in infrastructure investment. I really see Japan as the leader in this domain. Infrastructure aid has been a real strength of Japan, which has a long history of successful aid projects in the region after World War II, and a very good brand image for its infrastructure aid projects in Asia. And we've seen it capitalize on this by, basically touting its reputation for quality infrastructure investment, and this is something that both the US and Australia also do. Of course, the US and Australia both have strengths and have various initiatives. The US has their new International Development Bank, Finance Cooperation, and Australia has a number of new initiatives, which I won't go into. But there's really a lot of exciting opportunities, and all three countries are building on, a legacy of a successful aid in the region. So, like I said, I want to focus mostly on moving ahead and this puzzle that they pose in the panel description of the fact that joint cooperation was announced several years ago, but there don't seem to be very many projects underway, and what can we do to change this? So my first one is very brief and may sound trite, but the three countries have to basically be willing to spend the money on infrastructure investment, which is difficult but very important, and understandably difficult now in the atmosphere of COVID-19 with lots of domestic priorities taking precedence, understandably. But in order to really make an impact on the gap that I was talking about, you really have to be able to put the money into the projects that are needed for the region. Second, I would say that the US, Japan, and Australia really need to articulate a proactive, independent vision for their aid initiatives that isn't simply a reaction to China or telling countries not to take money from China. The message about quality is out there, and that's clear, and I do think that that appeals to countries. But then what else is there? Is there a a vision for certain types of projects, and that hasn't been as clear. We've seen Biden and Suga announce plans to cooperate on 5G and clean energy and smart cities, for example. But are those the real priorities that are out there for trilateral cooperation? Are they something else? That message is less clear, I think. Third, the countries have to find ways to encourage greater private sector involvement. Now, this does not absolve the governments of providing public sector investment, but in the current spending that we see on infrastructure in the region, really private finance is a very small part, and that needs to be increased.
Canberra, Washington, and Tokyo have worked on a solution known as the Blue Dot Network. This initiative provides assessment and certification of infrastructure development projects with the goal of lowering their risk perception, and thus attracting private investors. However, certification does not necessarily lead to direct private investment. Policymakers are wondering what more they can do to get the private sector on board.
I recently wrote a report about how you get the private sector interested and why the private sector hasn't been interested in the past. So there are numerous reasons why private sector companies don't want to invest in infrastructure in the developing world. One of the main things is that they have other infrastructure options in developed countries, and they see those opportunities as being much lower risk and having higher potential returns. And a lot of development folk I speak to say that private companies often overestimate the benefits of projects in developed countries, and they underestimate the benefits in the developing world. They see that there's too much risk. They're worried about social and political unrest. The other issue that's really impacting a lack of private sector interest is a lot of the infrastructure pipelines and for connectivity projects are being developed by the World Bank or development agencies, and they're prioritizing the greatest development need. Where is it most urgent that we put these things? However, there's currently no project pipeline that instead prioritizes what's the safest investment, what are the potentially best returns on a project. And even though that's not very it's not prioritizing for the greatest need, if you prioritize for commercial interest and you get businesses building things in the developing world, that will attract more business. And so you get this kind of snowball effect where businesses have gained confidence, they've seen other businesses in that market do well, and now they want to get in on that. And so you'll eventually get more and more infrastructure if you just break through the surface of the initial hesitation. So my final point is about what can the Trilateral Infrastructure Partnership do to actually solve this problem, get more projects, and get the private sector on board. Well, I suggested that the Trilateral Infrastructure Partnership and the three countries aren't best placed to be the ones to attract the private sector. They're thinking like governments do. They often think, they often wait for the private sector to come to them and to take advantage of the government's support and frameworks available. Whereas from the business perspective, they're thinking that if government has a proposal for them, that government will reach out to business. So instead of having something run by the government, I imagined this Indo-Pacific infrastructure program. It would be a program based within an existing multinational development bank, because there's already, a very congested environment of hubs, infrastructure hubs, and other basically platforms. So I want to create something in a larger development initiative that's already tried and tested and has a credible reputation. And then that program would basically provide a brokerage service for businesses, like if you can imagine like a matchmaking service for businesses. So that it would be run by finance experts and project managers and people with on-the-ground expertise in some of the countries that it would be working in. And it would really highlight, the programs that had the greatest commercial interest, and then match companies with governments. So whether that's the Australian, Japanese, or US governments to fund these projects. And I think that that's one of the key ways that you can start to break through these barriers and create an infrastructure pipeline that serves commercial interest.
Apart from initiatives aimed at increasing private sector investment, the US, Japan, and Australia also need to have a clearer strategy for funding allocation. Experts have suggested that with limited funding, the trio should target their investments in several strategically important countries in the Indo-Pacific, where there is potential to yield better financial and geopolitical outcomes.
If you look around among the 10 countries in the region, you cannot help but realize some of the divisions, separations, grouping going on among the 10 countries. I normally say 3 big guys, 3 medium guys, 3 small guys, plus very small guys, Singapore. Those top 3 guys, Indonesia, Vietnam, the Philippines, those guys, I think, are ready to rely on us when they face with some sort of a challenge from outside. They are ready to rely on Japan and the United States and Australia. So we tend to give a little bit of preference in supporting their infrastructure needs. And the medium 3, Malaysia, Thailand, and Myanmar, they swing from administration to administration. Their position changes between regional players, big guys. Small 3, Laos, Cambodia, and even Brunei. You simply cannot expect them to rely on us when they face with the big guys in the region. And Singapore, Singapore is always independent. They do everything by hosting U.S. maritime vessels, as well as having a huge trade with China. So I think based upon this recognition of what's going on the ground, we tend to give priority to the development need of big 3, the Philippines, Vietnam, and Indonesia. I'm not saying we're not doing anything with other countries. We are doing a lot to other countries. But if we do this prioritization too much, we are just trying to dissolve the ASEAN. So we don't try to do it in such an obvious way. We do it in a very subtle way. But my point is we need to somehow prioritize our limited resources.